Okay, hello everyone. Welcome to CHU's August 2025 webinar on our latest product updates. We have Residential Strata along with our personal lines products, home contents and landlords. Firstly, we'd like to acknowledge the traditional owners of the lands on which we operate across Australia. As we reimagine strata living to create healthy buildings and harmonious communities, we draw inspiration from Indigenous wisdom, in particular the values of collective responsibility, environmental stewardship and community. We pay our respects to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples who are part of our CHU family and the broader communities we serve. So given we have new products in the market, just a brief overview here, we have our 7 insurance products along with our CHU services division. Under CHU services, that includes CHU Assess, which is of course our loss adjusting and assessment service, and CHU Building Resilience Services, or BRS as we call them. BRS supports strata communities to identify and address issues within buildings, so think roof inspections, defects management and other tailored solutions to strengthen building resilience. So today is a very important and exciting webinar because we've recently launched our updated market-leading products, and we have our CEO, Kimberly Johnson, here today to present this new offering. We also have Steve Cheepak, our Head of Underwriting, and Daniel DeBonis, Senior National Underwriting here. They will be answering all your questions. So please, if you have questions throughout the webinar, pop them in the chat. Steve and Daniel will respond as we move through the webinar. I'll pass over to you, Kim.
Thanks, Renee. That was really beautiful. I like the new acknowledgement of country. Welcome, everyone. We've got a lot of people on the webinar this morning. It is not a beautiful day in Sydney. It has been raining absolute cats and dogs this morning, so I'm happy to be inside in North Sydney. I guess what we'll go through today, there's so many things that we've kind of been working on. It's been really exciting to launch them all at once. And we'll try and go through this in a way where we just kind of focus on the things that have changed and what to do with that. So we'll go through the new product offering for Residential Strata, the new policy wording for Residential Strata. We'll also go through something pretty exciting, the specifics of that, the changes that you'll see through StrataTech, and then also the new business and renewals, what it means for you guys as intermediaries. And we'll touch on right at the end our new home, contents and landlords insurance products. So the first thing is the new CHU Residential Strata insurance policy. I personally am very excited about this, and I can't express the fact that this has actually been in the making for 2 years, and that's how long it takes to bring a new product to market with a big insurer in Australia. But I'm really happy with what we've ended up with, and a big thank you to all of the people within CHU who have worked on bringing this to life. So what have we done? We have simplified the policy wording. So that's to say we've actually changed the structure of the way that the policy looks on the schedule. We've also increased the limits on all of the small sub-limits within the policy. I'll go through them. And there's also a brand new cover option that hasn't been there before, and some new default covers. So I'm really excited to bring this to you today. First things first, the new product structure. So this is what CHU Residential Strata Insurance Plan looks like now. The wording has been consolidated. So we had 9 sections, that's going down to 6. And the main way that has happened is through taking any section that relates to property and bringing that all up into section 1, insured property. Policy 2 is still liability to others. Section 3, still voluntary workers, 4 fidelity guarantee, but it does now make 5 office bearers, and 6 the government audit cost and legal defence expenses. So even the machinery breakdown is now a feature of Policy 1.
And it was just made logical sense to us to put that policy structure in place, because if you think about the catalyst for a claim under catastrophe or lot owners fixtures and fixtures and fittings, it was all predicated on a claim arising from the building section. So rather than have you needing to flip between sections, between previously section 1 to 7 to 9, it made way more sense to keep it all under the one section, so that flows a lot more easy to understand for our customer base.
Thanks, Steve. So you can see here, which I think Steve was alluding to for me, you do have lot owners fixtures and improvements in Policy 1, catastrophe machinery breakdown, and a new cover, which is lot owners contents, which we'll go into. So just hold that thought, and we'll move through. So the other changes we have done to policy sublimits, all of these are based on sort of either claim examples or the fact that the actual cost to do these things that we used to be able to do for $2,000 or $5,000, simply we can't anymore because of inflation and claims costs. So first one, special benefit 5, electricity, gas, water, and similar charges, so excess. That's gone from 2,000 to 5,000. As we see buildings getting bigger, the claim for these excess costs can also get bigger as well, because if you have big pipes leaking, you do have a lot of excess water coming out. Special benefit 6, electricity, gas, water, and similar charges, unauthorised use. This is when people sort of plug in their EV into your building and charge it from their building. There's other examples of this that we see all the time. But once again, when these unauthorised use cases do happen, they can get expensive these days. So that's gone up to 5,000. Key and lock replacement. I think we all know that electronically coded keys are very expensive today. And what we were finding was that 5,000, we were quite often reaching that top level of the limit for that benefit. And so we have increased that all the way up to 25,000 to keep pace with, again, we're not just cutting keys anymore, we're electronically coding keys. Yes, you can have a copy of the slides from this webinar. They'll come out with the CPD points. Special benefit 14, modifications. So this will be by way of example, if we have a unit owner who, as a result of an insured event like a fire, becomes disabled and then requires modifications to their home to live a new life, potentially living with disability. So that's shifted from 25 to 50,000. Once again, you can't do much for 25,000 building work these days. Benefit 16, mortgage discharge, has gone from $5,000 to $10,000. And damaged office records has gone from $50,000 to $100,000. Section 3, voluntary workers. So what we've done there is we've taken the minimum level of cover up to $300,000 for the capital benefit, or $3,000 a week for an injured voluntary worker. Again, this is just matching the top cover that we had out in the market. Section 4, fidelity guarantee, we've taken all the way up to 250,000. And I guess what my experience of fidelity guarantee claims has been is they can be varied in the way that they happen. And quite often these days, any fraud will be more sophisticated than what we saw in the past. And they really can be larger sums of money. And we also have larger sums of money sitting in funds for bodies corporate, and more significant work going on as well. And I will mention for our customers in South Australia, you have a different legislative requirement around fidelity guarantee. And so we know you have to hold a minimum level of cover relating to what has been in the bank accounts over the last 3 years. And you will still be able to increase that in accordance with the Strata Titles Act. But the default minimum sum insured will come in now at 250,000. I am probably most excited about Section 5 office bearers liability. So office bearers liability has to date been an optional section of cover for CHU, and basically covers were kind of going from 100,000, 250, a million. And what we saw, probably only about 60% of our customers actually took this cover at all. And what we are seeing in our increasingly litigious society is more and more of these types of claims. And what we often have happen is you'll have an office bearer who hasn't necessarily, or a committee who haven't necessarily committed an act or omission, but they can be named in a legal action. And it can be very expensive to have individuals unnamed from legal action, especially if you're actually paying for that out of your own pocket and you don't have representation. So I'm really happy to see this come in. Again, we've given the maximum cover that we can. Included within the premium. So this isn't an extra charge anymore. It's included within the premium up to 5 million. I think it's a really appropriate level of cover for what we're seeing in the current environment. And it is a big jump. It's a big jump from nothing. But what we're trying to demonstrate here at CHU is this is really an emerging issue. We have seen more and more of this type of claim as the years go by, and certainly just more litigation around strata. I don't think any of us at CHU thought it was appropriate for the 40% of groups who weren't taking any office bearers cover, because it really doesn't matter if you have a large building or a small building, someone can sue you. And so this, for me, is really, really important. And this is the most exciting thing I think that we're delivering today for no extra premium. We do have a number of case studies available. So if you have customers who haven't had office bearers liability in the past, who don't understand what it is, or who want to get an understanding of what they could be covered for, we do have case studies available at CHU to kind of show the kinds of claims that we actually see in real life against office bearers. Steve Cheepak, do you want to add anything to that?
I think it's also worth noting that regardless of whether your state and territory you're operating in has duty of good faith provisions, where sometimes liability can attach to the owner's corporation, where you're going to establish whether someone was acting in good faith, the legals have already started. The cost of defending oneself has already started. So the office bearer's liability is still critical. We actually had a question in the chat about what's the impact for smaller schemes if it's 4 units or less. Office bearers, we need to remember, are doing their job on a completely voluntary basis for no fee or reward or any form of gratuity. So the cost impost of going from, say, 100,000 to 5 million, if CHU is losing any policies, it won't be as a result of the $5 million office bearers liability cover from a premium sense at all. So it made sense to just give everyone a high base level of cover in the event they need it. As Kim alluded to, there's a lot of customers who don't even realize they have an exposure there, but it's acting in good faith and trying to represent the building as a volunteer. So we think it's a very important benefit, whether you're a small building, a medium, or otherwise.
Thanks, Steve. Next, this is I have said that office bearers is my favorite thing that we've delivered. I love it because it's automatically included. I'm very happy to say that. The next thing I'm excited about is because this is new. We haven't seen this in the market before, and this has been a bugbear in the claims process for the whole time. I've worked at CHU. So what we're bringing in is an optional cover for lot owners' contents. Now, when I talk about a bugbear, what are we actually trying to do? We're not trying to pick up, I dropped my iPhone in the toilet. That's not where we are. I see that Steve has appreciated this. What we have seen time after time after time is where you do have multiple units damaged. We often see a claim can be delayed because a unit owner doesn't have any level of contents cover, which means there's no insurer responsible to remove their, for example, wet or soot damaged carpets from their unit. And what that means is there can be a delay in that happening. That can exacerbate damage, but normally what that does is it exacerbates a claim because it exacerbates the time it takes to do restoration. And so what we want to do is we want to take that time out of the claim. So I'll just give you an example. A strata lot experiences water damage. The insurer is able to rectify 95% of the damage that's occurred under the building insurance policy. And then we inform lot owners time after time that that tiny little bit of damage to us needs to be rectified by them because they either don't have a contents insurance policy or they have not yet made a claim on their contents insurance policy. They could also potentially be under excess on their contents insurance policy. So with our lot owners contents extension, what we're aiming to do is just to remove that complexity out of the claim. And any day that you can take out of a claim takes a huge amount out of loss of rent, particularly where we have multiple owners damaged. And so we do really see this as a cost control measure as well for the building claim. If the strata building's damaged by rainwater, storm, or escape of liquid, in the event a residual amount of the lot owner's property within the damaged area is affected, CHU will speed up the process by completing all of the repairs. And so what we're going to do here is we'll have options for $10,000 per lot or $20,000 per lot. We'll go through the specifics, and Steve, I would love you to help me with this because this has been a labor of love for you. You've put a lot of work into this and every word that's on this page. I don't want you to read it out, but in a nutshell, what are we seeing here as this new optional extension for lot owners cover?
Yeah, it's me and I don't know what the collective noun for a team of lawyers is, but whatever that is to get the final wording. But so we wanted to make people's lives become easier at claim time. So what's the major source of loss in strata or property as it is? It's water-related claims. So anything related to rainwater, storm, escape of liquid, things like that. So we're figuring if there's a building damage claim that occurs, which impacts some of the defined items like your carpets, your blinds, your light fittings, things like that, which are defined in the policy under the cover, why not cover them all at the same time rather than saying to the owner, look, we'll fix this plasterwork, we'll fix this water damaged roof, talk to your insurer about this square meter of carpet because it's not covered under the policy. They then talk to their insurer. They say we're not doing anything till everything else is fixed. They have to pay 2 excesses. The process, like I was already getting angry talking about the process, let alone living the process. We're really just trying to simplify the process overall by making it easier to, and that's the reason we pick those perils, because one, there's the majority of the claims where it's impact strata relate to those perils, and two, we're not trying to be a quasi contents insurer. If someone breaks in your front door and nicks your iPhone or your DVD player, actually, how old am I? No one uses a DVD player anymore. But any of your other valuables, that's not the intended cover. It's really to be an add-on when a claim is suffered under the strata building policy.
Yeah, I think the salient points here are it has to be admitted as a claim under policy 1, so it's got to be in connection with building damage caused by water. We'll move on from this, and so once again, we're really targeting things like your appliances, carpets, curtains, light fittings, your air conditioning units, and then also, particularly in New South Wales, your paint, wallpaper, and your temporary floor and ceiling coverings. So again, not your iPhone, not your portable glass or any of that sort of stuff, but just the things that we constantly see as delaying the building claim. So we want to get people back in their homes a lot quicker. What are the excesses and limits of cover? So I think I did mention that they can choose. So this is an all-in or all-out basis for the whole building. And they either choose $10,000 a lot or $20,000 a lot as a limit. And the excess on this is just the building excess. So yeah, just the building excess. It's just the one excess attaching to this. And there is an additional premium, which works out, it's really only a few bucks a lot, isn't it, Steve?
Yeah, it's between about entry level covers about starting at around $50 per lot. So if you've got a 4-lot scheme, 200, and keep doing the maths upwards. But it is completely optional. It's up to owners to consider whether they want it. We didn't want to impose it on all owners, but it really is an extension of some covers that are already been loosely in place. For those who've been in the industry long enough before a number of insurers came into it and everyone's got relatively similar wordings. Floating floors was the biggest bugbear of claims teams' existences about who covered it, who didn't. Then, of course, a discrepancy between New South Wales and ACT when it comes to wallpaper and paint and things like that.
New South Wales and the world.
Yeah. So that it's really an extension, taking that level of cover and taking it further. So whilst the concept is brand new, it's not entirely what's the term? There was already a precedent in place for it. We've just taken it to the next level to make people's lives that even bit easier.
Yeah, I'm really happy that we've been able to do this. Next slide, and I think this is really important. Does this negate the need for lot owners to have contents cover? It does not, right? We still have liability issues within the lot. We still have all your furniture, all your personal possessions. But what we see time after time is we simply have a lot of owners or a lot of people living in apartments who don't have any level of cover whatsoever. And what we're trying to do is a catch-all for all of these people who are living in strata who we experience daily without any cover at all. So no one should go out and cancel their contents insurance. No one should go out and cancel their landlord's insurance because of this existing. It's not a replacement, but when you do have tens of units or multiple units, you will have uninsured units. And we're very happy to be able to include this as a part of the building policy where people select it. One of the things I want to... Oh, sorry,
Sorry,
Steve.
Kim, to interrupt your flow, but there's a couple of questions probably easy just for me to answer verbally. Someone's mentioned that home appliances are covered, but in the previous slide, it says we've excluded cover of use for residential purposes. I think that might be a misread. This cover only applies to residential units. So if you've got a mixed use scheme, the commercial lots will not be covered for lot owners' contents. And you'll see this as we go into what's shown in the strata text slides. Oh, here's a slide we prepared earlier to describe that. Before I pass back to Kim, someone also raised about Airbnbs. Now, I can tell you, I reckon we know about 0.004. That's a fancy actuarial percentage term. James will be very proud of me as my boss.
Yeah, James and David Barnes have the calculators out.
% of residential units that we know are used for Airbnb. So the basis is not necessarily, is it used for Airbnb? It's what's the nature of use of the lot. And it's a residential lot. And lots being used for Airbnb are typically used for residential purposes. So Airbnb would not impact whether a claim is admissible for lot owners' contents. But a good question.
It's really important to mention. So we do have a lot of mixed use schemes, particularly in newer buildings in Australia. This cover cannot be selected for commercial units. This is not what it's for. This is only for residential units within a scheme. And so, as a segue, we have put some changes into Strata Tech, and because I like to do everything in an annoying way, I'm going to show you this first. So what we've added is an extra field. So I've said number of lots total and number of lots residential. And so that is for the rating of this to make sure that we're not charging commercial lots if they're in existence. And we are also now, you will see, collecting within the residential product Stratotech, we're now collecting any commercial occupancies. The key reason for that is actually nothing to do with lot owners' contents. It's because we had a few sneaky tobacconists in what were otherwise residential buildings, and so we've had to put this field in to locate them.
Our first ever tobacconist fire was in fact a flex policy. Flex only does residential.
It was
So,
Flex Insurance, rebranded purple now. The shade is Valora. So yes, just we have now number of residential lots we're capturing. If I go back in Stratotech, what you now see is a rolled up policy 1. And so you can see with CAT, you're just opting in or out. Machinery breakdown, opting in or out. And then with the lot owner's contents, you can opt in to a 10,000 sum insured or a 20,000 sum insured. And then again, the excesses are there. There's nothing additional or extra about the lot owner's contents. So you'll see those changes in Stratotech now, right, Steve?
correct. As long as your policy's been renewed between the end of July and now. So if you've got an existing policy, not until renewal can you get your lot owner's contents, which is glad you asked him, because that's one of the questions which came through in the chat.
Yeah, so, and I guess the key reason for that is because the previous PDS does not have a provision for the lot owner's content, so we can't endorse it on because it's not there. So as they come up for renewal, they'll have the option for this cover. As they come up for renewal, they will be seeing their $5 million office bearers defaulted and their new higher sums insured.
Couple more questions that come through. Stratotech will
Yes.
provide a breakdown of the cost. So if you select lot owner's contents, it will show the cost up front. So you can pick that. The owner's corporation can choose that. There's also a comment about if there's contents cover, who picks up the first loss if there's they have their own contents. So if there's a strata claim, the purpose of this cover, remember, the intent of cover is to help owners through their time of need. So if the strata building claim happens and they've got this option, we will fix everything up to that sublimit. If there's anything over and above, it could then go to the contents insurer if required.
Thanks, Steve. I just saw a question in there about whether this option will be available on the SCTP. I think there's a manual workaround for the SCTP at the moment, but when the SCTP do their next strata release, you'll probably see this in there.
That's right.
Did I sound like I knew about the SCTP just then? I shocked myself. No, Daniel just put a little comment in that helped me. The sublimit is per lot, that's correct. Sorry, I was just seeing questions come up. Steve, do you just want to check through and see if there's any other questions we want to answer about that before I shift into something else?
Yeah, one of the questions was, can individual units opt out of a lot owner's cover? So no, it's for ease of administration, for rating and so on, is best to have, well, if you select the option, it applies to all units. And the reason for that's very clear. You could have the mix changing, you could have ownership changes, the amount of endorsements at a policy level, and the back and forth would be administratively painful for yourselves more than anyone, I would suggest.
Well, it also unsolves our problem about yeah, the people who are opting out of insurance.
Yes.
Okay, I'm going to shift now into home contents and landlord insurance. There's a number of changes here. I hope I get them right. Everyone step in. We've done a lot. So we've got 3 different product changes that we're talking about right now. So shifting away from strata into first community association. So community association home insurance. So we have, at the moment, we've got about 3,300 lot owners' homes where we do the insurance for the actual home in the lot owner's name. We also have probably over 100,000 lot owners where we insure their CA, but we don't insure the lot owner. So we see a lot of opportunity in this space. But essentially, what we've done is we've done some upgrades to this product to make it more like a regular home and contents insurance product. The next thing we have is our landlords product. So the landlords for strata, we are allowing the landlords for strata product now to be combined into the community association. So we'll have a building section now on landlords. So it doesn't just have to be landlords for strata. And with contents, which has again always been for strata, owners, owner occupiers, or for renters, now we can add our lot owner contents onto home insurance for a community association. Right, so this is for all of these. So I'm going to show it to you, but it's for all of them. The first thing that you'll see updated, again, to make our community association home insurance far more fit for purpose and far more like what people would get out in the home insurance market. We see a building sum insured safeguard. What the heck is that? It essentially, when it's selected, they can receive up to 30% more than the building sum insured shown on the schedule if if they qualify for it at the time of purchasing the insurance. So we don't tell people what to insure for, but we also do have a fairly good understanding of what an adequate sum insured would look like for a particular type of house in a particular area. And so what the building sum insured safeguard does is it basically checks a range and says, yes, the sum insured that has been entered for this building is appropriate. And so if we do see it as being appropriate, it will say this building qualifies for sum insured safeguard, which means then that the sum insured can be escalated if they find themselves underinsured in the event of a loss. The reason for that, basically, it's not something that people have to pay extra for, but what it's doing is it's just not rewarding deliberate underinsurance. So you'll see it again at the time of purchase. If the customer has selected a sum insured that doesn't meet the criteria for the sum insured safeguard, what we're then indicating is that sum insured is actually low. And so it should be taken up. And when it gets taken up and meets the safeguard level, you'll know that they're within a range. I'll leave it to the people who give personal advice.
Sorry, Kim. Those of us who have worked in strata for eons, we can often be quite insulated to broader insurance. If anyone's ever applied for their own home insurance and things like that, the database or platform you're going through, or frequently if you put in the sum insured or say, we're not prepared to insure it for that low, you can do it between this range. It's similar to that. And if you fall within the right range, you get this extra benefit.
Thanks. Then we've got the sum insured adjustment. So basically what this does is it just increases the sum insured by 0.5 a month to allow for the inflation that will occur during the year. This is a very unique CHU thing for strata properties where the building is insured with CHU. If the contents claim is also in connection with a building claim, so landlords or contents, the excess will be waived on the personal contents policy. And so you can see that these covers for strata do marry up with the residential strata insurance plan as well. And then you also have the combined policy discount. So there's a 10% discount which can be applied if you take out your building and your contents with CHU. Once again, this isn't new in insurance, but they're just things that we haven't had in these products at CHU in a meaningful way before. So on the new community association home insurance, this is particularly specifically for homes that are within a community association. It includes building and contents cover. You'll remember from the old community association insurance plan, we had to be insuring the common property to be able to insure the home. We've actually broken that connection. So all it has to do is exist within a community association to be able to purchase this product now. Again, building and contents can be selected together, which that was not possible on this product before. Or if it's not an owner-occupier, the separate landlords for investment owners can be taken out. And then, yeah, there's the three ways that they can take it. They can take the building only, they can take the contents only, or they can take both. So this is not a new product. It's been in existence for 20 years, but what we've done is make this a real viable competitor to just standard home insurance that people will be buying from the internet. So again, we do not have to be insuring the community association to insure the home anymore. So we're breaking that link. But what you have to do is have that community association within a community association, which means ACT community title, New South Wales community associations, precincts or neighbourhood associations. Queensland, it's your standard format plan, not your building format plan buildings. SA Community Corporation, WA Survey Stratas. We do not have this property ownership type in the Northern Territory, Tasmania or Victoria. And so we would not expect to be seeing this being purchased on StrataTech in those states.
And for those of you wondering where the majority falls, the majority of our community association book does fall in WA, SA and New South Wales, with SA well and truly leading the way. They'd have over 50% of the community associations, and that's largely because of changes in legislation, which happened a long time ago, that most of the buildings get registered as a community corporation as opposed to a strata corporation.
I did just see a question from one of our SA clients, Sharon Stewart, who asked if the landlord and the building cover could be combined together. Yes, it can.
Yeah, so the landlord's policy is
Wait.
the landlord's policy, you select your building cover within that wording. So it is the one wording. So
I can't get my laser pointer off. I'm trying to get to the next slide that shows it. So this is the new landlord product. So it's not the old product, but it's it's the same PDS, but it's an updated PDS, which is why you see that same color scheme and the old brand. But now you can select building cover there. You can still just select contents or just building or building and contents. So this is still the product we use for landlords for strata, but we can also add the building component in there for community associations and a few other examples. Contents insurance. Again, this has been our traditional contents for strata, which was for renters or for owner occupiers. But now we can add the building section onto this as well. Have we updated any of the covers within there? I think some of the key covers that's the sum insured safeguard and everything, isn't it, Steve? They're the
Well,
new
the
things.
accidental damage and portable contents are a lot more defined now and much easier to understand. So it's a big upgrade. Even if you're just saying it's a standard contents policy, it's a much more modernized product, and it still carries the ever important excess waiver on the strata side of things. Should CHU insure the building?
Yeah. And so I think with all of this, and we are kind of coming to the end of this webinar at 11:48. I think with all of this, what we're trying to do is just fill all of the gaps that we've been seeing over time, either within our cover or within the market. And what we really want is to complement the residential strata product with these other products, or to complement the community association plan with these other products. But all of this, and I see these questions through the chat, there's a lot of questions about the contents cover and the strata cover. And so I just wanted to do a little plug, if I could. CHU have sponsored a new short course with ANZIF, which is the Australian New Zealand Institute of Insurance and Finance. It's 2 I's, not 2 F's. People always get that wrong. It's a short course that CHU helped develop, and when I say CHU, it was mainly Stephen Cheepak, to sort of go through the basics of strata insurance and also how strata insurance and contents insurance can interact with each other. I would recommend this. It's a short course, $121. I have personally done this course to make sure it was good, and I thought it was really useful. So I would recommend it to anyone senior to have a look at. But particularly if you're a junior broker who works in general insurance, or if you're a strata manager trying to understand insurance, that this is designed for everyone. So this isn't just designed for insurance people, it's actually designed to educate strata managers as well. And with all of that, I guess I want to say thank you to everyone for coming today. I do appreciate that there have been over 100 questions in the comments. I know we haven't got to all of them, but what I would request, particularly with these new covers that we've put into residential strata, please consider them, and please consider the way you're documenting your broking recommendations to a body corporate, to incorporate these new levels of cover, the new defaults, and also the new options, just to let people know what's available to them. We would not have done this if we didn't think it was really important. So I'm hoping that we get to deliver this straight to unit owners as quickly as possible. So brokers, if you have any questions, please do ask your BDMs or the underwriters in your local area. But thank you all for coming. And Steve, thank you very much for joining this webinar and really saving the day. Thanks, everyone.
Thank you.